Here you go. Here's that 720 put. That was featured. 1270 bids were down below the floor. And as the stock was falling to $692, this put closed at $30.50. That should have been paying you money, but we talked about how they would steal the premium as the stock would be going down in the put. There it is. Here is the equity on Priceline. Just now made a 3-minute low, but we're comparing the chart that the 720 put, when the stock was selling down to its lows, the first low here on the opening bell of 692, and here's that low right here, 692. Now let me show you something. At the same time frame here on this opening bell with the 720 put, see, let's make sure you understand it, 720 put. At the same time, they were making that thing was torpedoing down in price line. They took the 720 put, they stole all the premium and dropped it to 1790 when it was deep in the money. When that thing was selling off to the first lows, just like the name did on a first low right here, 692. And then here, in the same time frame, the stock Priceline equity is at its all-time lows of 692. Right now, it hit 685 and bounced like a rocket again. It's going to do that all day. One of these bottoms, I'd go to the 690 call. That's the put. All right. Here's the 720 put. That's this chart. So when you were selling to 692 and the 720 put is in the money, the value should have went up to 42 or $40 because you're supposed to get rewarded when they drop in price in your favor. But what do? Is they steal that bid like I had called for. And yes, if you bought them the previous day here, you would have been taken to the woodshed, not because you were wrong, because you would have been manipulated in the price. And he just comes back and he makes a $35 high. And there it is, the 720 put. And here's that put chart. Once again, I just want to emphasize that when the stock was going down to 692 right here, they were taking this put down to 1790. And it was a 720. That meant that thing was 18, we'll do the math. It was 20 some odd dollars in the money. There's a range, 1710 is your range. But the 720 put in the money, though, that's $17.10 range. See, so that's how you steal the bid. That's what goes on in the market maker pit on weekly options. Let this be known, and I'll be happy to talk with anyone about this. You can always get involved in our option pit. We have rooms that start at $3,000 a month, $5,000, and $10,000 a month. And the thing about it is, when you get these bids like that, you're selling $10 up. Well, hey, that solves all about what if. This is here, it's done, it's live. It's how they took the stock to 692 and how they took the premium to 1790 off of that close and stole it, came back to $35, all within this price movement and price line. That's another $10 off of the bottom again, and bounced again. Undercut 692, bounced. Then they rolled it over, came down, put in that lower low. And these are lows that Priceline was putting in prior to the earnings and bouncing off of these levels. So we can even go lower. But I can tell you right now, it's about getting the entry and how they stole the premium there. Based on the call, the put chart right here, they just took all the money out on the 3-minute bar. You were 692, you were deep in the money there, and you can see where the bottom was, how they stole the premium down to 1790 and got the entries to 30, and then out at 35. That's what we do here. That's what market making is. That's what an MMT does. But an MMT has to know how. Why would they steal the put? The public would never. They're shocked. They're dumbfounded that could even happen when you're dropping in the equity down to 692, because you were. And that was on that first 3-minute bar. But the public could never think, no, that's supposed to be going up in value. Yeah, you were right, but look, that's what happens in these markets. And if you're not careful, it'll happen to you.